Let's start with the major macroeconomic events happening next week. And you can see the week is jam-packed with stuff. And this is like market moving stuff. So you can see on starting Wednesday, we have core CPI. And that moves the markets like crazy. If there is any kind of CPI surprise, this could be a make or break moment for the markets, because you must have noticed that inflation has been sticky in the past to CPI, PPI readings. And so far, Powell has kind of dismissed the data. I mean, he does acknowledge that it's sticky, but he also says that let's wait for more data points. So this is that data point which could show a trend developing. Then we do have March FOMC meeting minutes. This is not the FOMC meeting. These are minutes of FOMC meeting being released and from the last meeting. But market participants are always looking for hidden clues in the entire transcript that is released to the public. So that is also that can cause volatility. Next, the very next day, Thursday, we have core PPI. Now both these are market moving events. So we are going to have a lot of fun next week. So core CPI, core PPI on Thursday, and then as if that's not enough, we have earnings season starting next week. All right, so as far as earnings season is concerned, all the major banks start reporting earnings on Friday. And as if, CPI, PPI, FOMC, all that stuff is not enough, we'll have all this earnings event happening with the big banks reporting on Friday. And this, the big banks always kick off the earnings season, and that kind of sets the tone for Dow Jones, at least on Friday. And then the following week, we have Netflix and Tesla reporting earnings. That will set the mood for NASDAQ and tech. Next, let's look at some RRG charts. So I've been including these charts in my weekly outlooks because I realized that not everyone has access to these, and you need to be a paid member on stockcharts.com. So I'll just keep including these in my outlooks. So with RRG, the relative rotation graph, I'll link the video on how to understand these charts if you haven't seen that video. But as you can see, the four quadrants, improving, leading, weak, lagging. And you can see that actually nothing is really bullish right now, except XLI, which is the industrial sector. That is the only sector which is bullish. Everything is either in improving or lagging quadrant. So the market strength, there is no strength left in this rally. And that's why I keep saying that we are overdue for a correction. Everybody knows that. We just need one trigger to start that correction, and that could be anything. It could be some kind of inflation data, CPI, Powell saying something, the banks not reporting favorable earnings. It could be anything. So as you can see, XLK, let me drag this chart. This is current date, it's showing April 1st, because I look at weekly data. Since I'm not a day trader, weekly data works best for me. So it's showing 5 weeks ending April 1st. So the next week's data will be available on Monday. So right now I just have this data. So if you look at, I'm going to go back to January 29th. Notice that real estate was in the leading sector. Financials were leading. Technology was leading. XLC communications, which has been very strong, it has been just rotating between leading and weakening. And so I wouldn't mess with XLC, and I've told you guys many times that XLC is very strong. See how it keeps going from weakening back up to leading. It's just rotating like this. And Netflix is a big part of XLC. So next week, whatever Netflix does, That's what will have a massive effect on communication sector. So anyway, so what I'm trying to point out here is, starting here, let me go here, when tech was bullish. So tech has been bullish for majority of 2023, and until January, I would say, and tech was still showing a lot of strength. Now, if you move this calendar, you can see that tech is beginning to drop out of favor. XLK is going into the weakening quadrant, and it's continuing on its downward trajectory. But one thing I've mentioned is that the way you should use these RRG charts is ignore what's happening in the weakening and improving quadrant and focus on lagging and leading. So until XLK actually goes into the lagging quadrant, you can take bearish bets on tech, but I wouldn't go too crazy. So once it enters the lagging quadrant, that's when a proper bearish move will start developing, and then you can start going heavy with your bear puts on tech. So watch out for tech. We will start seeing effects of Tesla and Netflix earnings starting next week, and of course, CPI, PPI, all that stuff will also show effect on the entire market this week. All right, let's look at some charts now. So I have removed all my technical indicators from this chart, and we are just seeing 3 moving averages. And the reason why I'm showing you that is I have made some videos in the past telling you how you could avoid getting chopped out by the market, and if you want to go bear heavy, what should you be looking at. And one thing I have mentioned many times is the moving average crossover. So the blue is the 8-day EMA, yellow is 21-day, and pink is 34-day EMA. So that's the EMA I'm using. People use all sorts of EMA crossovers. Some people use 10, 20, 30, but they all give you the same information. So what I've been mentioning is, how do you know when you can go bearish on these markets? Like, I've been taking bearish trades quite a bit, but I've kept my contract size really low because like for example, if I take a dollar wide spread on SPY, I just take one contract which risks only $50 because I'm not sure if when the markets will go into pullback or correction. So I'm just waiting for that. And the signal that you can use for that correction to start is the moving average crossover. So as you can see, this is November 3rd, 2023, when this bull run was beginning to start. And the 8-day EMA crosses over the 21-day, which is the yellow line. And if you are an aggressive trader, you could start ramping up your trading volume at that point, but the real confirmation comes here when the blue line crosses over the pink line, and that is 11.7. So that is when this moving average crossover happens, and as long as the blue line stays above the yellow line, you keep taking bullish trades or buy the dip trades. Now, when will this end? Because markets can go up forever. I mean, corrections are a part of the trading cycle. So when things go up like this, big corrections happen, and that's why I've been expecting a correction. It's just frustrating that it hasn't happened for many months now. So now you will see that the blue line is actually touching the yellow line, which is the 21-day EMA. So that would be your first sign where you could start entertaining the thought of increasing your bearish bets or increasing your contract size. But the real confirmation will come when the blue line actually crosses below the pink line. So watch out for that, because that will be your signal for going bearish. Now, one interesting thing I want to show you guys, in case you don't know, the symbol showing up is DIA. If I just do minus DIA, it flips the chart. This is think or swim. It flips the chart. So sometimes people have a problem, shifting their brain. Like if they're used to looking at bullish charts, it's hard for them to reverse that and spot a bearish condition showing up. So what you can do is, if you are trained that way, because you could do minus DIA in Thinkorswim, and that flips the chart, and now you can see, does this look to you like a bull run starting? So if this bull run is starting here, that means that's a confirmation that actually a bearish price movement is about to happen. So that's a handy little technique if you have trouble visualizing these charts. Let's switch back to DIA again. So DIA, whether you look at DIA, QQQ or SPY, okay, all of these charts looks kind of the same. This candle, this red candle on April 4th, was a huge bearish engulfing candle. And what usually happens with bearish engulfing candle is, again, there are no guarantees in the stock market, but this is a very well studied pattern. So a bearish engulfing candle is really simple to read. You have some kind of price action on the previous day, and it's a bullish price action, and the next day you have massive sell-off, and the size of the bearish candle completely overshadows the previous day's bullish action. So whether it's at the top or the bottom, so that's your engulfing candle. And when that happens, usually that is taken as a sign of a trend change. So we don't know what's going to happen next, and obviously with every indicator gives false positives, so markets could just go back up if CPI information is the inflation data that comes out very tame. Now let's look at VIX. That is one indicator I've been telling you guys to keep an eye on, and I've been saying that if VIX starts trading above 16 level for even a week, look out below, because that is the sign that a correction could be starting. And for the first time, after that bearish engulfing candle showed up, VIX is now above 16. Now the thing is, just because it's above 16 doesn't mean that it can't get crushed next week, but this is the level of interest that you should be watching. If VIX starts trading around in this region, be prepared for a correction. Be prepared to go heavy on your bearish bets. That is VIX. Other interesting things, TNX. Treasury yields have been spiking up. This is the end of 2023. From then on, with minor pullbacks, treasury yields have been going up constantly. And with TNX, the level I've been pointing out is 45. So if you start seeing TNX revisit 45, that will coincide with an upcoming correction. TNX, other interesting things, CL, which is oil futures. Now, they are predicting that oil can probably go back to 100 again. And as you know, oil prices go up, everything goes up. So oil prices going up will bleed into all inflation readings going forward. So this is an ominous sign of what inflation data will look like. So that's the market outlook for this week. I'll see you guys early morning tomorrow on Discord.